Welcome to another episode of Boom and Bust. I'm your host, Tony Clement, and I'm here at the News Forum where all voices matter. Well, as usual, there is no deficit of economic news, and here to help us understand it all is Thomas Caldwell. He is our monthly visitor, and he is also chairman of Caldwell Securities, Inc., and comes to us from Toronto. Welcome back, Tom.
Thanks, Tony.
I guess the first question, the obvious one, is there's been a lot of, volatility in the markets. Can you tell us what's going on there?
Well, volatility is the name of the game. It can be your enemy, it can be your friend. Just depends how well you control your emotions. A lot of the volatility within markets or within stock markets is quite suspect. There are monster pools of trading capital out there who will trade derivatives. And if they see the market coming down a tiny bit and they want to build short positions, they can add to that downside very quickly by shorting derivatives in a few heavily weighted stocks. And then it's like the tail wagging the dog. So some of the volatility is artificial. And of course, there's a swing of news, good news, bad news, and there's a lot of emotions in markets. So it's the convergence of artificial volatility, emotions running rampant, if you will. A lot of people, the do-it-yourselfers, has been really badly hit in this market. If you look at stocks like Robinhood, so there's emotions and as I say, contrived stuff.
Yeah, and I guess one person has said to me that when you're trading stocks for free, then you're on the menu, right? So there's a lot of data that a stock trading platform can get from your trades, which could accelerate the losses. Is that right?
Absolutely. Data is everything. But, it's like that old phrase, Tony, you've heard many, many years ago. If you're in a poker game for more than a half an hour and you don't know who the sucker is, it's you.
That's right.
Because you're coming up against a very sophisticated pro trading community, very sophisticated computer algorithmic trading that will just act unemotionally on things. But as long as you know what the game is,
right,
you have an opportunity at it where you can use the volatility. What's the old phrase? Everybody wants to buy low, sell high, but everybody wants to buy high and sell low. And you've got to use the volatility to position for a longer term. That's how I tend to look at it.
So, and love to get your sense. I know it's looking into the crystal ball a little bit, but longer term, is this trend going to continue or is it going to stabilize a little bit?
I'm a little bit of an optimist, and I'll tell you why. Pessimists get stuck in the present, and investing is about the future. So I got to take what it looks like now, and try to see if there's some basis or reason for change, for getting better or indeed getting worse. If I were to look at markets now, I think there is some room for optimism on several fronts.
Okay.
First off, the Ukrainian war. If I used a line from, I think, Apocalypse Now, someday this war will be over. All wars end eventually, maybe not the way everybody wants, but eventually that's going to end. Interest rates moving up. I think central banks are going to be very, very cautious, given the jittery nature of capital markets. So I don't think humongous interest rate increases are going to be in the offing.
Okay.
Inflation is very skewed. There's a lot of odd things. We're coming off a 2-year shutdown. There's so many things, and the numbers are suspect. So I'm not worried about it too much right now. So there's lots of things to work about, but you have to look through them to say, where are we going here? And that's where I think I have a little bit of optimism.
Are you getting a sense that people are starting to hold tight a little bit then?
One of the smart things I did when I started this firm many years ago was no margin accounts. It's one thing to be down 10% in a portfolio or 15%. It's another to be wiped out.
Yeah.
So we discourage clients from levered trading. We're investors and we manage money for investors. So we've never had a sense of real panic in our client body. Many of them have been with us and had great performance over a long-term period. So interim volatility, we tend to be opportunistic. That's how we tend to look at it, and indeed most of our clients look at it.
Good perspective. Thank you for that. We're going to continue our discussion with Thomas Caldwell. He is the chairman of Caldwell Securities, talking about all things market, and then we'll go broader from there talk a little bit about the economy as a whole as well. Tom always has a point of view on that. Stay with us. We'll be right back after these messages.